Hey everyone, welcome back to the channel. Today I want to talk about Apple. So this is a company I've followed for a long time, and I want to tell you about why I've never sold my position in Apple. Quick little backstory. Back in 2013, I bought 2 shares of Apple at about $500 a piece. Today, those 2 shares are worth a little under or over 10,000, depending where Apple's trading, and it equates to just over 61 shares after stock splits and dividends. It's a company I've loved over the last almost decade now, and something I probably won't sell anytime soon unless something fundamentally changes about the company. But let me hop on over into the updated DCF I pulled together, and I'll talk through a little bit of why I love this company so much. So first thing here, let me walk you through kind of their income statement and why I find it so attractive. So I have financials going back to 2017 pulled in here through 2021. And then they actually released their Q1 2022 results recently. And I mean, you can see they've had pretty significant sales growth in the last 5 years. And then Q1 alone this year was actually about 11% growth over Q1 of last year. Now, the reason why I like Apple so much is something we can see here is over these last, I don't know, call it 5 years here, you've seen the services revenue go from 32 billion to 70 billion, so over double. The reason why I like this a lot is this is actually tremendous for margins. It helps margins quite a bit because a lot of the service revenue is going to be like Apple Care and then the App Store. So things that don't really have a lot of costs associated with them. And we can even see in Q1 this year, services grew 33%, which is huge. And it just basically flows through to the bottom line. Something I was concerned about for a little bit was kind of the updates to their store policies where they were being sued by like Epic Games or whoever around kind of taking 30% cut and some of that stuff kind of falling out, but it looks like it actually hasn't had a big impact on the revenue. So that's kind of the first thing I've loved about it. And then the second thing is just like the product sales, right? They continue to grow 50% in 5 years. So growing about 10% a year, which is pretty tremendous. They had a down year in 19 and then back up a little bit in 20 and then a ton of growth in 2021. Honestly, I wasn't expecting this to really carry forward too much, but we've seen it in Q1 already. We've seen pretty good growth here. So I think, this year they should still be able to get kind of a high single digit growth for the full year, around 10 or 11%. So when I hop over to my DCF, this is kind of the same story I always have. Every year I kind of pull one of these together and I put what I would consider relatively conservative estimates into my assumption. So I have 11%, which is their Q1 growth, assuming they can hold that for the rest of the year, and then just slowly declining until they get about 6% in about 5 years and then staying there. So I'd say that's a pretty, relatively conservative estimate on revenue. COGS, once again, this is actually pretty conservative as well. I have it increasing 10 basis points annually. So the thought here is as service revenue continues to grow, margins get better. And if we actually look at Q1, you can actually see Q1 was actually much better margins already. So if we take their COGS here, the 69 billion, and you divide that into the total revenue, they're actually already at a 56%. And that's because, they're having more revenue shift into the service area. So it comes through with better margins. So I think, long-term in the next decade, could they really get closer to maybe, a 50% margin? I wouldn't be surprised, but to keep things conservative, I kind of hold this flat here. From there, R&D, 6%, I'm just holding flat. SG&A holding flat. Usually these things scale as businesses grow, right? You're not going to have to spend the same proportion of revenue on SG&A or on R&D. It doesn't scale linearly. But for the model itself here, I'm going to keep it relatively conservative. Tax rate, just a standard assumption I make. And then CapEx, leaving flat at 3%. And then working capital, same story, just leaving flat at historical averages. And then stock-based comp as well. So with all of these assumptions, I'm getting a valuation between $2.6 and $3.5 billion. And today, Apple is trading at $2.65 trillion. So that equates to, $162 price per share. And our valuation is giving us 2.6 to 3.5. So their current valuation is on the lower end of our assumptions, and these are pretty conservative estimates, I would say. If Apple really does come out with some new revolutionary product or anything like that to continue growing top line sales, there's only upside to my model, and this has been a continuous theme I've seen throughout. So the other thing I love about Apple is dividends. Now, obviously, dividends I don't think is a reason enough to take a position into a stock, but I think when you have a really large profitable company like Apple and they are issuing dividends, it's kind of just a little bit of extra extra reason to potentially make that investment. So if we look back, right, I invested back in kind of the summer of 2013. And they were paying a $3 dividend at the time. This was before any stock splits, so I was getting $6 of dividends per quarter. So on my $1,000 investment, so not amazing, not horrible, right? But what I've done is I've just reinvested these over the years, and right, you can see shortly after I bought, there's a 7-for-1 stock split. So my shares went from being 2 to 14. Continuing getting dividends, reinvesting them, right, and then this 4-for-1 that happened 2 years ago now. That took my 14 shares up to 56 shares. But I actually have almost 62 shares today. So that extra 10% of shares I've received is purely from taking the dividends and reinvesting them in the stock. So that is something I like, is that Apple has been growing continuously for the last decade. And if you have been just reinvesting your dividends in stock, it's actually, paid off pretty well for you. So anyways, those are just a couple of things I really like about Apple. I think the DCF, every time I refresh this, it always looks good. I have yet to refresh the DCF and be like, oh man, Apple's severely overvalued. So I think it's one of those stocks where, people expect it to just kind of have this slow and steady growth, and that's what it does. But when you're as profitable as they are and as big as they are, right, doing $400 billion of revenue, it's pretty crazy. So anyways, hope you found this interesting or useful. Thanks for tuning in. Let me know if you have any questions or comments below. Thanks.